Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss COVID-19 cases, and we'll also take a look at some interesting maps that show just how the country voted for Joe Biden and Donald Trump and what that means in terms of GDP and who is contributing to that. So it's a really interesting conversation we're going to have. Before we get into some of these cool maps that you provided for us today, let's take a look at some of the COVID-19 data and where we're seeing the geographical composition of cases.
Yeah, I mean, the reality is the first spike we saw in April, a lot of people said we're undercounted just because we didn't have testing and things ready and people were kind of sent home unless they were really sick. So looking at hospitalizations is one of the ways to see just how bad the second and third waves have been. And we've now got to the point where hospitalizations in the US are equal to what we saw back in March, April. So we definitely have a spike in coronavirus cases. We have the second wave that's going through the country. But as you can see in the map, it's not really hitting the Northeast now. It's hitting most of the rest of the country, specifically the Midwest and the South again. So it's interesting. I guess the Northeast's behaviors were changed pretty dramatically by how aggressive coronavirus was the first time. And potentially some of the behaviors in the rest of the country haven't really been scared enough to need to worry about it. But now the hospitalizations are picking up, the death rates are picking up. It's potentially going to become a bigger problem for those regions and also for their economies as people react to the extra risk of walking around outside and definitely being indoors with other people.
You know, it's interesting when you bring up the economy. Despite what we know about COVID-19, we're seeing some conflicting signals as data continues to outperform.
Yeah, I mean, we have pretty much seen an outperformance of the data since we saw the bottom of the V shape, and a lot of the recovery has been a lot faster than expected. So one of the charts we're looking at today is New York Fed keeps track of an economic indicator index that they create. It just puts together a lot of other data points to try and work out where GDP is going to fall. And it's been trudging up pretty consistently. It's had a couple of little pull downs, and it did in the last week, but basically it keeps getting better. So the expectations for GDP are getting better and better as it goes through. And that just highlights the fact that the jobs data, which we're also looking at, has been relatively good. I mean, the new jobs formed were pretty good last week. The number of online job advertising is back to pre-coronavirus levels. Retail spending, we've talked about before, is better than pre-coronavirus levels. On lots of metrics, the recovery has been really good.
Let's also take a look at restaurants and mall traffic. We saw the increase, same V bottom, move to the upside. But if we continue to go into some lockdowns, and some states are starting to put restrictions. For example, in New Jersey, where I live, restaurants, bars, and so forth have to close at 10 o'clock. So while it's not as restrictive as the first time around, it is going to put some pressure on that hiring.
Yeah, that's absolutely true. And you can start to see it in some of this data, which is super high frequency data. So you got open table bookings are starting to fall pretty dramatically, and not just in the states that you're talking about, it's nationally. And mall traffic is also starting to dip. And it's interesting though, because we keep thinking there's headwinds ahead. We've looked at the coronavirus spikes. We've been expecting this data to drop over like it is, but it's taken a lot longer than I guess most people would have thought. So it'll be interesting to see whether it really does follow through into another sort of dip and like a second dip recession as we go through winter and wait for the coronavirus vaccine. But that's really the challenge that we've got right now is we have the economy potentially contracting, whether it's forced shutdowns or just people not wanting to be close together again, for the next probably 4 to 6 months before the vaccine is widely available, and it will be back to normal, I guess, because we won't have to worry about our health concerns when we're out with other people.
Let's take a look at the next couple of charts here. Map of the United States, where, if we take a look at it, you can see the disparity in terms of who voted for Trump, who voted for Biden, and a little bit of purple in between.
Yeah, I mean, it is super interesting to look at a map of the United States and try to think, what's fair? Trump has pretty famously hung the map of all the counties that he won last election, and it's a very red map because most of the land that's in America tends to vote Republican. And if you're going to do a binary red-blue, a lot of the counties end up Republican just or Republican a lot. So when you look at the land that's owned, there's actually quite a lot of space that's Republican voting. But then when you look at the presidential vote, it's actually pretty close, like 70 odd million each. It's almost 50-50 really. So what's happening, if you look at the populations, is there's a lot of big populations that are blue and a lot of little populations that are red. And you can kind of see that if you look at the map by population, the big circles, big cities tend to be blue, and all of the farms and the sort of manufacturing belts seem to be red. But there was an interesting chart that's come out yesterday from Brookings Institute, which also looks at the counties by their contribution to GDP. And so you've got a situation where basically the vote is almost 50-50. The land mass and the counties are almost 80-20 Republican. But when you look at the contribution to GDP, actually the contribution to GDP is about 70% from the Democrat counties and only 30% from the Republican counties. So really big economic difference between the Republican voting counties and the Democrat voting counties. And obviously, complete contrast to the per head or per acreage metrics of looking at voting.
Yeah, it really is interesting when you put it in the context of GDP. Phil, thanks so much for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.